Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, it's Steve and Joe from Fresh Agenda, Everegg's Global Insights team. And Steve, we're back this week with a quick update on the market, as well as this week's pulse. Just some comments about the US election, and you've got the chat of the week this week.
Yeah, just a bit different. Okay, some roundups around the futures markets.
Yeah, some interesting moves in skim milk powder this week, Steve. It looks like maybe the world's coming up to the US. Still getting that news out of California that avian influenza is spreading throughout those herds and constraining milk production. Expecting that to show up in October data, some of the impact of that is easing, but there's very, as we've talked ad nauseum about, very low inventories in the US and the EU. We're starting to see the EU prices starting to firm there as well, Steve, just with a little bit more demand coming on stream.
That's right. If we look in the comparison of butter, not much change here. New Zealand firmer is really the only change. And when we look at butter futures in the EX, not actually much to see here. You wonder why I put this in, but we'll talk about this later. It is a good setting for that, but yeah, very little change, a little firmer in the short term.
Mm-hmm. Yeah, and this is the skim milk powder futures, again firming, covering short-term needs. By the looks of that line just bumping up there into first quarter 2025. It's well above spot, Steve. A little bit of faith in those Asian requirements that are going to be firming into the new year.
And New Zealand looks similar, doesn't it? The change looks similar this time. That Q1 period has benefited from stronger interest.
And turning to whole milk powder, that's also had some pretty positive moves in terms of the futures markets, pulled up strongly on that demand pull. We know that New Zealand has been really closely managing supply and demand of whole milk powder, and it looks like they're pairing that supply pretty well into the new year. So in terms of cheese futures, Steve, increased supply looks like it's just starting to weigh on the market. We're hearing some of these new sites are already accepting milk. A couple of other cheese sites, large cheese sites, are actually ahead of schedule. So, I guess the market's starting to consider where this cheese is going to go. Still fairly subdued demand, particularly in the food service channel for the US. Retail a little bit better, but year-end demand is a concern because it usually does slide at this time.
Yeah. And okay, so going to Pulse, we had a positive Pulse event.
And Steve, it was the best Pulse ever for both powders this week. Whole milk powder up on the Pulse 3.7% compared to last week's GDT event number 367 and 5.3% up on the prior Pulse result a couple of weeks ago. So we're really seeing that the whole milk powder prices just start to trend up fairly substantially in the last few weeks, Steve.
Skim milk powder less consistent, Joe. That chart doesn't have the strong upward tick that we saw on whole milk powder. This time, again, the best GDT result, both auctions and Pulse, since the end of 22. This time, skim milk powder went up 2.3% on last week's GDT, where there was a little dip recorded. C2, 1.9% last Pulse 2 weeks ago. There was a bit of a change in the US government, Joe. We can't leave this go past without just talking about some of the obvious impacts that we might expect from trade and migration policy or immigration policy. Let's firstly deal with trade. Look, there have been promises through the campaign from President-elect Trump to apply general and punitive tariffs. So general tariff meaning tariffs on all imports into the US, and anywhere between 10 and 20%. So there's obviously going to be some inflationary effect on that on spending, maybe some retaliation. But when we come to punitive tariffs, friends Mexico, China, and Canada have been called out for special treatment on some grievances that have been held for some time. So here, the size of the tariff is obviously important. China's been threatened with something as much as 60%. There's likely to be retaliation. It's likely that dairy and feed grains, or dairy and grain, will be singled out in any retaliation, and therefore there are some risks for dairy in this space. Risks for US cheese, in particular, with the importance of Mexico exports. given the expansion in capacity which is underway, and that becomes more important in the next year. So that will be a sore point. And into China, it's mostly about whey exports, which have been important in helping stabilise and firm the whey market recently. Other exporters have been quickly in the media to point out their both upsides and downsides. Both New Zealand and EU have been quite vocal. They see things either way. I mean, the US is an important market for New Zealand in a number of commodities, likewise to the EU, but they might also see opportunities where the US has more difficulty exporting into some markets where they compete. So it could have a double edge.
Yeah, I mean, there's still a lot to play out. Obviously, Steve, the new administration is just being put in place. Inauguration in January. So there's a lot of talk about, it may all be talk or it may be a way of leveraging deals. So we'll have to wait and see. The other big central plank of the campaign for President-elect Trump has been on migration policy and discussions of mass deportations as a signature policy for the Trump administration. It could be a constraint on production. We've seen some numbers in the last week or so that 86% of agricultural workers are immigrants and about 40%, 45% of those are, it's estimated, undocumented, but it's a very uncertain space. So how, when, and what will happen on that front is still very much up in the air. Steve, you had a really good discussion with Tiffany and Phil this week on the commercial call. So if you're a subscriber, definitely have a listen to that and we'll watch it with interest.
Okay.
So your turn for chart of the week this week, Steve. What have you got?
So I want to stay with butter, and I promised that earlier. I think there's an interesting chart I dug out this morning about where we are in terms of seasonality. This butter rally has been quite strong, and it's sort of resurged since taking a small breather recently. But I pulled this out. This is the 5 and 10 year average seasonality, and it seasonality in terms of a comparison to the highest price, and that price is today. Mm-hmm. So today is the day on average when the butter market comes undone, which we'll watch with interest. So tonight, all eyes on the screen. So that's a pretty strong consistency between those two time dimensions. Absolutely. But will it? So when we think about how we've recently got here and looking at this comparison of cream, butter and spot milk prices, everything's just continued to tighten in the EU. Cream's driven higher. Now we're talking about 11,000 euros per tonne is the new threshold. Demand is still pulling it up there. Butter's got to keep pace if anyone wants to produce butter. That's the price it'll be asked. So that's firming. There's still some talk of uncovered positions, which is amazing. But we're also seeing spot milk. It's firmed, it's steady, it's sort of faltered but gone back up again. The reports of poor milk solids, particularly fat. And really in terms of, milk supply could change this. But France and Germany combined are really at the bottom of the trough in early November. So we're not really seeing any evidence just how strong that, seasonal uplift might be to, bring in more cream supplies and weaken this. But Christmas demand, once that passes as well, is also a threat. So pretty interesting to watch just whether we will extend this run past today's usual drop-off.
Yeah, it certainly doesn't look like it's going to fall off a cliff from here, Steve.
No. Okay, well, that's all we have this week. We thank you for watching, and we'll be back again next week.